Did you know that in 2023, over 1 million businesses were sold in the US alone, yet most buyers didn't use their own cash to make the deal happen? That's right, almost 75% of business buyers in recent years have used creative financing methods to make their acquisitions. It's not just the big sharks who are buying up companies. In fact, everyday people, just like you, are finding ways to own businesses without breaking the bank. Here's the shocking truth. You don't need millions in the bank to buy a business. You can do it with little to no money down by using strategies that the wealthy have been using for years. In this video, I'm going to show you exactly how to leverage OPM, other people's money, find undervalued businesses, and negotiate deals that put money in your pocket without needing a huge upfront investment. If you've ever dreamed of owning a business but thought you couldn't afford it, think again. We're about to break down the strategies that will allow you to buy a business and start building wealth in 2024. Let's dive in. Chapter 1. The Mindset Shift. From worker to wealth builder. To buy a business with no money, the first step isn't about figuring out the best deal. It's about changing how you think. Wealthy people don't see the world the same way as employees. They look for opportunities, not problems. In 2024, the mindset shift is even more crucial. The world is filled with financial tools, strategies, and opportunities that the rich know how to leverage. The key is thinking like an investor, not a consumer. Successful entrepreneurs know that money isn't the only resource available to them. Time, expertise, and connections can be just as valuable. In fact, according to a report by Forbes, 78% of entrepreneurs say they owe their success to their network. So, don't just focus on the dollars you don't have. Think about the skills, relationships, and knowledge you can bring to the table. In books like The Millionaire Next Door, it's clear, wealthy people don't wait for opportunities to knock, they create them. They see risk as an opportunity for reward. The first step in buying a business with no money is understanding that you don't need cash to start. The rich use other resources, whether it's their time, expertise, or even the sweat equity they put into deals. Instead of dreaming of owning a business someday, ask yourself, what skills do I already have? What can I offer in return? Don't underestimate the power of your unique value. Remember, your mindset will determine the outcome. As Henry Ford once said, whether you think you can, or you think you can't, you're right. Chapter 2. Secret of Leverage. How the rich use OPM, other people's money. Leverage is everything when it comes to buying a business with no money. The rich understand how to use other people's money, OPM, and that's one of the main reasons they grow wealth so quickly. OPM refers to using external financial resources, such as loans, investors, or even seller financing, to fund your business purchase. Statistics show that 90% of businesses bought through acquisition involve some form of financing. But this isn't your typical bank loan. Seller financing, where the business owner agrees to take payments over time, is one of the most popular strategies for acquiring a business with no money down. It's a win-win. The seller gets the business off their hands, and the buyer doesn't need upfront cash. Another powerful strategy involves using private investors or partners. In 2024, crowdfunding and peer-to-peer lending have made it easier than ever to find external funds. Over $25 billion was raised through crowdfunding platforms in 2023 alone. These funds allow you to buy businesses, not with your own money, but with the support of others who believe in your vision. In his book Rich Dad's Guide to Buying Your First Rental Property, Robert Kiyosaki shares that leveraging OPM is the fastest way to scale wealth. He writes, the key to becoming rich is knowing how to use debt to your advantage. You don't need your own money when you can use the wealth of others to build your empire. The rich aren't afraid of debt, they control it. The more you understand these creative financing tools, the easier it will be to acquire your first business. The most important thing to remember is that money doesn't have to come from your pocket, it just has to come from somewhere. And when you think outside the box, opportunities are everywhere. Chapter 3. Hidden Gold Mines. Finding undervalued businesses ready for acquisition. One of the most overlooked strategies for buying a business with no money is finding undervalued businesses ready for acquisition. The market is filled with hidden gold mines, businesses that are struggling but have untapped potential. These businesses often go unnoticed by most investors because they appear unsexy or too risky. But that's where the opportunity lies. In 2024, there are countless small businesses facing economic challenges. According to a recent Small Business Trends report, 40% of small businesses are looking for buyers or partners. This creates an opening for smart investors who know how to spot these diamonds in the rough. The key is finding businesses that are undervalued, not failing. The best way to find these gems is by identifying distressed businesses that are still profitable but might need a little attention. Look for businesses with strong customer bases but poor management. These are the types of businesses that you can take over, turn around, and make profitable again. Warren Buffett famously said, "The most important quality for an investor is temperament, not intellect." This rings true for business acquisitions. Don't be intimidated by businesses that need work. See the potential where others see risk. When you acquire a business like this, you can often negotiate a deal that requires little to no cash up front. In The Art of Buying a Business, authors discuss how undervalued businesses are often available for pennies on the dollar. They suggest looking at businesses that have been mismanaged but have a solid product or service. Often, a change in leadership and strategy can turn these businesses into profitable ventures. By 2024, more tools are available than ever to evaluate a business's real value. With resources like business valuation calculators and expert advice, you don't have to be an insider to understand whether a business is undervalued or not. So, before you get discouraged by high prices or scary financials, take the time to dig deeper. The business world is full of undiscovered opportunities just waiting for the right investor to uncover them. Don't forget to subscribe for more tips and strategies on how to buy a business with no money. We've got more insider secrets to share with you. Chapter 4. Creative Financing. Mastering the art of no-money deals. When it comes to buying a business with no money, creative financing is your secret weapon. You don't need to rely on traditional loans or use your savings. Instead, you can structure deals in ways that require little to no cash up front. According to a 2023 report by Small Business Administration, 75% of all small business acquisitions are financed creatively, meaning buyers use options like seller financing or earn-out deals to avoid paying a large lump sum. Seller financing is one of the most popular methods. In this arrangement, the seller agrees to finance the purchase over time, often at a low interest rate. It benefits both parties. The seller gets to offload the business without waiting for a buyer with huge cash reserves, and the buyer can acquire the business with little or no money down. This method has become more common in today's market as more business owners look to retire or cash out. Another option is an earn-out deal. This allows you to buy a business and pay part of the purchase price over time based on future profits. If the business performs well, the seller gets more money. If it doesn't, the buyer pays less. This structure reduces the initial financial risk for the buyer and creates a win-win situation. Additionally, equity sharing agreements are a great way to buy a business with no money. In this case, you partner with an investor who provides the funds, and in return, they get a percentage of ownership in the business. This model has become increasingly popular as more private investors are looking to fund profitable ventures. Robert Kiyosaki, in his book Rich Dad's Guide to Investing, highlights that the key to wealth building is using other people's money. He says, "The rich don't work for money, they make money work for them." By leveraging these creative financing strategies, you can acquire a business without using your own funds, enabling you to build wealth without financial risk. Chapter 5. The Negotiator's Playbook. Crafting win-win deals without cash. Negotiation is an art, and to buy a business with no money, you'll need to be a master at it. Successful entrepreneurs know that the key to any business acquisition isn't just finding the right deal. It's negotiating terms that benefit everyone involved. Whether you're negotiating with a seller, investors, or partners, your ability to structure a win-win deal can be the difference between success and failure. The first rule of negotiation is to always make sure both parties feel like they're walking away with something valuable. For instance, if you're negotiating a business purchase, the seller might be willing to accept less money up front in exchange for a percentage of future profits. According to a study by Harvard Law School's program on negotiation, 50% of successful deals are the result of mutual benefits, not a one-sided arrangement. Seller financing is one of the most effective negotiation tools. You can use this strategy to reduce the financial burden of the purchase while giving the seller a steady income stream for years. In The Lean Startup, Eric Ries talks about how creative deals allow you to innovate in ways that traditional financing doesn't. Negotiation, when done right, allows you to structure a deal that feels like a win for everyone. One powerful tactic in negotiating without money is finding out what motivates the seller. If the seller is looking for a quick exit or is ready to retire, you may be able to negotiate a deal where they get paid over time, allowing you to acquire the business with minimal upfront cash. Understanding their goals is key to crafting a deal that works for both parties. If you're not sure how to start, consider using a lawyer or dealmaker who specializes in acquisitions. According to Inc. magazine, working with an experienced professional increases your chances of getting the deal terms you want by 75%. Whether you're dealing with an individual seller or a corporation, a professional negotiator can help you navigate the complexities of buying a business without money. Chapter 6. The Wealth Building Blueprint. Turning your acquisition into an asset. Once you've acquired the business, your job isn't done. In fact, it's just beginning. Now comes the real work, turning your acquisition into an asset that generates long-term wealth. This is where most people fall short, but the rich know that the real money isn't in just buying businesses, it's in making them grow. The first step is to stabilize the business. If you've bought an undervalued or distressed business, it's likely going to need some improvements. Start by analyzing the business's finances. A report by McKinsey & Company shows that 80% of business failures can be traced back to poor financial management. You'll want to ensure cash flow is consistent, debt is manageable, and operational efficiency is maximized. Next, focus on increasing revenue. Look for ways to optimize the business's existing products or services. Could you expand the product line? Can you find new markets or customers? According to a Harvard Business Review study, businesses that focus on innovation grow 40% faster than those that don't. By implementing these strategies, you can increase the value of the business and eventually sell it for a profit if you choose to. Then, build the brand. A strong brand increases customer loyalty and allows you to command higher prices. By improving the business's online presence, customer service, and marketing strategies, you can start positioning it as a valuable brand that others would want to buy or invest in. Finally, consider scaling the business. Scaling is essential for long-term wealth creation. The rich understand that you must grow a business beyond its initial scope. Whether it's opening new locations, adding more products, or going global, scaling can exponentially increase the value of the business. As Grant Cardone says in his book The 10X Rule, you must operate on a scale so big that no one can ignore you. This is the mindset that will turn your acquisition into a real wealth-building asset. By improving, branding, and scaling the business, you'll be able to create a company that generates passive income and grows in value over time. Don't forget to subscribe for more expert strategies on growing your wealth and building a successful business. We're here to help you achieve your financial goals.